In this video, I want to talk about what the analysts think about SoFi stock. Everyone knows my opinion of the company. I'm a Super Bowl, okay? I'm a big fan. But we don't know what the main 9 actual analysts that cover this company think about this stock. So if you like that sort of SoFi content, make sure you guys give me a like and subscribe down below if you want to see more financial content just like this. Let's jump in and looking at Timothy here. Timothy, obviously, not so good of a success rate, 11% upside that he usually has on his companies. He follows a lot of high growth companies, tech companies, and hasn't rated this company for 2 months. With, though, a $19 upside, which is 48.9% upside. So, or a $19 price target. Although there actually is an article to read here, Timothy doesn't actually say much about this company, just saying that, they set the price target to $19 a share, whatever. So not much to see there. On to Michael now. Michael, amazing success rate, great average return. Nice to see that, Michael. But you have to say that there's actually an $18 price target on this company as of 14 days ago. That's not including the bank charter, obviously. But this was back whenever it was $14 a share. Let's see what Mike has to say. So, it says here that their company actually lowered their price target from $18 to $18 from $21. And Mike wants to allocate funds to digital banks that have favorably positioned for higher interest rates. I totally agree. While also still having fintech type growth potential from a user and revenue perspective. This is super important, okay? I've been talking about this forever now. Whenever you actually find right now what they're talking about with interest rates is that you want to be very much near the banks because they benefit from increasing interest rates. But I'm not a value investor. I don't like, investing in the Wells Fargo of the world and taking this slow. I'm young. I like to take a couple bets. And SoFi, along with a myriad of other fintech companies that I also like, are great bets because they still benefit from those lending processes, but they also are growing like crazy. So whenever you get a mesh of the cyclical nature of these stocks that are falling like crazy because they're software or high growth companies, although as if that changes how they're actually growing in any sort of way. But anyway, regardless, and they are going to benefit from the cyclical nature and also are also growing like crazy. This is sort of lining up of lower valuations, still high growth, and benefiting from the change in interest rates. Next, we have Betsy here. So Betsy, good success rate, okay average return, right? Nothing to complain about. $20 a share. So that's a 56% upside or 56.7% upside. The Morgan Stanley analyst has a little bit to say here. So they took their price target from 20 down from $22 a share on the belief that the fourth quarter is all about reaffirming robust growth expectations. The analyst reiterated an overweight rating, stating stocks are currently priced in a slower pace of revenue growth versus our plus 40% forecasts. We expect management to reaffirm our view of revenue growth in 2022. She actually goes on to say quite the mouthful of stuff here, so I just want to sort of shorten that down to adjusted 2022 expected revenues of $1.42 billion. That's very in line with what management said. And we also expect 2022 expected EBITDA of $164 million, very expected, with EBITDA margin expansion from 3% in 2021 expected to 11.5% in 2022. These are huge differences and very exciting. And it's why she still believes that there's a almost 57% upside on this company. But that's just what Betsy has to say, okay? Like these analysts are not multi-billion-dollar hedge fund owners that are just have a knack for this, okay? This is their job. They research a couple, high growth companies and they hope to get it right. But as you can see, their success rates are still in the 40, 50, 60%. It's okay, and I'm not trying to disparage anyone, but they get a lot of these things wrong, and it's good to trust your own gut rather than on the reliance of someone else. But that being said, I still like to go over and get a couple new opinions. So on to Mike, and speaking of take take it with a grain of salt, okay? So success rate 33%, average return 11%. So yeah, not doing so good, but that's okay. So $16 a share, 25% upside. So even if Mike, which I'll just spoil it here now, this is the lowest rating that we see is a $16 price target. And even then, it's still a 25% upside. So this is 8 days ago, which is actually later than whenever the bank charter came out. And let's see if he has a couple words to say. This is actually his first time, talking about this company. So he actually just goes on to talk about what the company does. So I don't want to, read through that. Although this part right here, we forecast SoFi to realize a 37% 4-year adjusted revenue compounded annual growth rate with $1.1 billion of EBITDA by 2025. 37%? I personally have only set it to 28% by the next, 5 years, not 4 years, but still, 37%. That's just crazy. But, and even then, he still has the lowest rating out of anyone here. After just explaining everything of what the company does, a SoFi bank charter could provide upside optionality and has the potential to reduce funding costs and increase net interest income. This is before the actual bank charter was released, though. However, I wonder what his opinion would be after the bank charter has actually come out. But that being said, however, with SoFi trading at 10x 2022 enterprise value to sales, we review SoFi's growth opportunity as largely reflected in current valuations. Our 12-month target price of $16 a share is based on a sum of the parts analysis and implies an 8x next 12 months plus 1 year revenue. That sure is a mouthful. Okay, great. So on to Dan now. Dan's got a okay success rate, average, returns, whatever. He's done 6 ratings on this company. However, it seems that both his ratings are like being lumped in at the same time. So I don't know. $17 upside, 33%. And although Dan's been reviewing this company a lot, there actually isn't any real articles that he's written. But yeah, just so you guys are aware, this is the current price of SoFi, $12.76 as of recording this video. But the upside on this company, even though, he's lowered this price target from 30 down to 17, it's still 33% upside. So this company is in deep value territory, in my opinion. But that brings us on to David. So David, wow, David, knocking it out of the park with a 64% success rate with a 21.1% average return. Hopefully you have a positive view on SoFi. $20 a share, which is a 56.7% upside. We've seen that before. That was 7 days ago, and this is actually his first rating, though. And although it says there's an article, there actually isn't. Whenever you click through, it just brings you to some generic SoFi bank charter approval thing. So hopefully, we'll get to see a lot from David. He obviously seems to be very, very successful at this, so I'm excited to see what his opinions of the stock are going forward. It's great to have you on the team, David. So now, Sean, not doing so good. That's all right, Sean. Let's see what you have to say. $30 a share, 135% upside. He's ambitious. 7 total ratings, okay? And no article. No article. This is 7 days ago. It's probably after bank charter or probably just about then. I think it was exactly 7 days ago. So, yeah, not much to say about Sean. It is sort of weird that the lowest guy here, Mike, at $16 a share, not doing so good. And then the highest dude, $30 a share, also not doing so good. So it probably leads us to think somewhere in the middle if we're just basing it off purely just what analysts have to say, which do not do. Do not do. I'm not telling you to do that, but whatever. Anyway, just funny to think, take in all the information. So anyway, Ashwin, 65% success rate. I think that's in some of the highest amounts, although, more conservative than David over here, who's just shooting for the fences. Good for you, David, but 13.6% average return. So this is 6 days ago. $20 price target, 56.74%. We've seen that. And let's see if Ashwin has anything to say about this company. So the Citi analyst keeps a buy rating on SoFi Technologies with a $20 price target after the Office of the Comptroller of the Currency conditionally approved the company's bank charter application. The bank charter is a key part of SoFi's strategic plan as it enables the company to offer higher yields to grow its retail deposit base, benefit from longer holding periods from its balance sheet assets, and retail instead of warehouse funding helps on the cost side. That's a weird writing. That's some weird writing. So either I'm a bad reader or that was terribly written. But regardless, probably both are true. Anyway, John, what does John have to say? 65% success rate. That seems to be the golden success rate today. 15% average return. Awesome, John. Let's see what we have to say. $20 upside. Who could have guessed? 56.7% upside. He actually did this today. Wow. Okay. Very cool. Thanks, John. So no article, because I literally don't even see it here. I'm sure I could maybe try to Google something, but I'm running out of time. I got to make my next one. So, you know, this is what John has to say. It is kind of funny. Let me switch over. It is kind of cool to think how the two people who didn't quite do this very well, and you know what, I don't want to judge them on their recent, investing. Maybe in the long term, they are better at doing different cyclical types of investing that just aren't panning out to what today's environment looks like. But for the main people, aside from Mike and Sean, who say $16 and $30, who are both out of their damn mind, okay? Most people are placing this stock at $20 a share. Actually, whenever you add all 9 of them up, it leads us to a $21.15 average price target. That's just right around a 60% upside for this company. And it's just incredible to think about how deep value this company is for how much it should benefit into the future as things start to, as stimulus starts to go away, student relief starts to go away, all these things. And SoFi is going to be there to help out. It just seems to be perfectly positioned. But honestly, I hope it goes to $10. I will scrape together what I can because I'm going to be holding it for the next year, 2, 3, 5 years anyways. Might as well get a couple shares cheaper anyways. So although it doesn't look good in my account right now, I'm happy to get it. Even if I can pick up a couple shares, it just makes it better in the long run. So, give it to me now. Let's get the pain out of the way quick and easy, and let me buy as much as I can. But if you want to know all the reasons for why I'm buying SoFi, check out the 32 reasons for why I'm buying SoFi stock. And if you could, don't forget to give that like and subscribe down below if you want to see more financial content just like this.